Okay, folks, and we are live. Welcome to Sunday Night Futures Live. This is Bob Desmond, and thanks for joining in. What we're going to talk about tonight are the opening price action of the futures markets. We'll talk about our two trades that we'll be looking to put on this coming week. We'll probably trade both. I'm going to walk you through the strategy. We're going to be using options for Chipotle Mexican Grill and Netflix, both of which report earnings. I believe it's on Tuesday, and those are going to be options trades, if I didn't say that. So I'm going to save the strategies for the end of the video. So those folks that are not interested in options, you don't have to sit through it if you don't want to. What else? We're going to talk about, are we seeing deflation or inflation? A lot of conversation going on, and I mean between people that I respect, as well as the talking heads on CNBC and Bloomberg and whatnot, about whether or not we're really about to get hit with deflation. And we'll talk about that a bit, because I think that's off. So let's say hello to everybody first, then we'll go into the futures action. And good John Spencer, good morning to you. He's over in New Zealand. Seymour Rivers, volume a little low. Volume on what? The major averages? Oh, the volume. The volume was low. Oh boy, here we go again. How is that? Better? Hopefully so. Happy Sunday, Big Bear. Buster Stacks, hey buddy, how you doing? Okay. If you could just let me know how that audio is, if it's a little bit better. Seymour, I'd appreciate that. All right, let's begin with the S&P 500. We opened up. We're good, Clark? Excellent. Thank you very much. JW, thank you. Seymour, thank you. All right, cool. Thanks, guys. Buster Stacks, the Fed can't, one, raise interest rates and crash the stock market. Two, let inflation run off the leash and kill the dollar. They cannot do both. Thank you. The show's over. He just Buster Stacks just made my my points. Very, very eloquently put. Larry, hello. Hey Bob, the S&P 600 small cap index is signaling bear market. Only 21% are above their 50-day EMA. Thank you for that. Good stat. Very good. Thank you. Yeah, the small caps got hammered last week. We remain short of the small caps. We haven't added yet. We're looking for that ultimate break. Hopefully we do get that ultimate break. And what would help that break occur is if you smash that like button, please. Please, I beg of you, smash that like button. All right, let's get to it. Futures action. We were up. We are now down. This is the S&P 500 E-minis. No new daily / weekly low as of yet. Let's just create an alert here. We're not that far away. And we're good to go. Let's take a look at the mid caps. They are up slightly, but off session highs. Let's go to a 15-minute chart here. Not looking good. Let's create an alert. Oh, I got a bunch of emails from people trying to sign up, and the links are redirecting to a 404 error page. We are aware of it. There's a whole bunch of issues with the website right now. Even with existing members receiving cancellation notices, I have my developer on it as we speak. I went through the website link by link, and there was a whole bunch of issues that need to get resolved. Sometimes you get an update and just knocks. We're on a WordPress system. It's an open source system, and sometimes you get an alert and it just knocks everything off. So we're dealing with that. We are aware of it, and we'll get it fixed. The Russell 2000, it is up slightly. Let's create an alert here. All I want to know is if we break to new lower lows, we closed out the week at the lows of the week on Friday. And for context of where we're at on the small caps, you know, we've been in this trading range going back to, you know, let's call it early March, and we've just been bouncing around here. Now we're probing that lower quartile, and if we break to a new weekly low where we have this alert set, we're probably going to test 2120 on the small caps. The question then is, does it hold? You know, we broke it back here in May, but ultimately we rallied back. But we didn't have the concerns, the validation of inflation that we do at current. Speaking of inflation, let's take a look at the US dollar. What happened to my dollar? The dollar is up. But I'll tell you, I was looking at a, Abel, thank you very much. Thank you for the super chat. Hey, Bob, can you do an analysis of the chart of Fastly? Of course, absolutely. Thank you very much for that. I appreciate it. Jody, hello. Matt Carter. Hey, brother. I hope everyone is bullish on the bearishness there will be. Very good. Jody, welcome aboard. Always good to have you. Chuck, hello. How you doing, buddy? Okay, let's take a look at the dollar. Now, what I want to point out, and I was looking at this earlier, about the dollar. Garrett Cunningham, IWM up or down this week? You know, it really just comes down to this, Garrett. And I have the alert set here. I'm very confident that if we break to a new weekly low, it's going to get ugly really quick for the small caps. We probably are going to move lower and perhaps retest this lower band of support. Again, let me pull it back for context down here. But what this market really needs to drive the Russell 2000 down lower is the exact opposite of what the tech stocks need, right? So the Russell 2000, they will rally if yields rise because they read into that, traders read into that expansion of the economy, good for the small caps to a certain point. Whereas where you get a rally in yields, that becomes detrimental to the tech stocks. And I'm going to talk about the Xlk and seasonality in a moment. But it all depends upon yields. I'm confident that it all depends upon yields and which direction they're going to go this coming week. So if we get economic data that comes out extremely bearish and really detrimental on the economy in and of itself, well then low yields, high yields, it's not going to save the small caps. They need economic growth. Now, I'm going to go to the economic data coming out this week. There isn't a ton coming out. So I think it's going to be quiet on the economic data front, assuming that there are no big shocks on these reports that nobody really pays all that much attention to. Really, this week is going to be all about earnings. Earnings continue this week. They heat up this week. So what we just broke to a new lower low on the mid caps. Let's go circle back here. We just broke to new lower lows on mid caps, small caps, and the market just broke to new weekly lows. So here's the Russell. We're on it. Let's talk about it. Let's go to a 30-minute chart now. And this is why we set those alerts. Now we have confirmation of a new weekly low, and it's not even 9:30 Monday morning. This is why we do these programs in advance of the 9:30 bell. We want to get up to date with what's going on. What's the pulse check of the market telling us? And right now it's telling us that stocks are weak. We are now down after being up seconds ago on the Russell 2000, down nearly a quarter percentage point. Going over to the mid caps, they have now broken to new weekly lows as well, down not all that much, down 0.09%. Going to the large caps, the S&P 500, we are now down 0.11% after being up. So this is a 30-minute bar, a 30-minute chart. We have not closed out the first half hour of trade. For all I know, we're going to close positive. We don't know yet. We're not going to read into it, right? But if we close here or lower, that would be an outside reversal bar or a bearish engulfing. And that's a pretty bearish chart. So, and that sets up for a continuation move lower. But that's only a 30-minute chart. What we really want to do is pay attention to the 4-hour chart. And the 4-hour chart, you could tell that we have a new lower low. It's a continuation move lower. Normally these long red candlesticks come in threes. So what I suspect is that before we open tomorrow morning, absent some real serious news coming out, sending the market down lower on a binary event, we're probably going to rally off the lows, just as we did back here, right? We had 1, 2, 3, 4 down bars, then we rallied back, lower highs, and we rolled over yet again. So as we begin the new trading week, not wonderful that we have a new weekly low. So let's keep that in the back of our minds. Now, I got off on a tangent. McCart, there will be blood. He's savage. McCart, XLK, same as IWM. Seasonality-wise, I don't know. I'd have to look at that. But I do have the data. We use TrendSpider for that. 35% discount code below. That comes with silver and gold level memberships as well. Big Bear, hey, McCarter. Oh, he's saying hello to McCarter. Langley McGinnis. Love that name. Any opinion on oil ETFs like Gush, Bob? Yeah. So Gush, I believe, is the bull ETF. Correct me if I'm wrong on that. Oil is not looking good right now. Energy was one of the worst performing sectors last week. So I'm a little bit cautious short term. I know OPEC promised to increase output. So that will weigh on oil, at least in the short term, to see whether or not they live up to their promises of increasing oil output. If they do, well, oil is going to see more pressure until such time as the market can absorb it. So we need to believe that there's economic growth out there. If we see negative projections for economic growth, like I'm not sure when GDP comes out, but it's coming out soon, that could weigh on oil, especially if OPEC follows through on their output promises. Garrett, do you like defensive growth stocks for the next year? If inflation growth is crushed over the next 12 months, I have to side on the I like data. All right, I like historical anomalies. And when we take a look at the valuations of the market right now, we're going to go to them in a few minutes. This is a market that is extremely overvalued, no matter what metric you use, whether it be the Buffett indicator, the Shiller PE ratio, we're going to talk about them in a moment. Whatever metric that you use, the stock market is extremely overbought. Now, you're going to hear people saying, you have the talking heads trying to take parking space up in your head about how earnings for this quarter are going to increase by 60%. What they're not telling you, some are, but some are just giving you a half a statement. And that half statement is earnings are going to rise 60% versus last year. But what they need to educate people on is not just a half truth. the full truth is that the comparison versus last year is very easily to beat, very easy to beat. Now, this time next year, show me a comparison versus this time next year. That comparison is going to be very, very difficult to beat, and I don't like the valuations of the market. So to answer your question, I would be very uncomfortable with having a large position to the long side, given the valuations of the market. I know it's not sexy to talk about that stuff, but it matters until, technically it doesn't matter until it does. I worry about it beforehand. I've been through 2 bubbles already, and I know how it ends. This doesn't end well. Okay, let's, we continue to weaken up here on the indexes. The VIX is climbing now. I don't know why I have stamps.com up here. Let's bring up bonds. Bonds are up, which means that their yields continue lower. We do have a new, I believe, new weekly high here. Let's validate that. Yes, we do have a new weekly high. And we are coming off that high at current. VIX is picking up steam. Dollar is gaining strength. Let's take a look at oil. Oil down just shy of 1/3 of a percentage point, but rebounding here, rebounding sharply. Let's take a quick peek at silver. Silver, do we have a new weekly low? Not yet. Rough week last week for the precious metals. Gold. Gold down $3.50 the ounce. The key here, folks, is that you need to see gold hold 1,800 the ounce. If it does that, then we'll begin to build a base and we could rally. But the dollar does need to roll over. And at current, the dollar is looking pretty good. But that being said, the euro, and this is what I wanted to go to earlier. If you take a look at the euro on a weekly time frame, stokes on the euro are becoming very oversold. Perhaps not a bounce this week, probably more downside this week, but in the next couple of trading weeks, expect a sharp rally in the euro. And take note of the fact that last week, we did put in a new weekly low, but just not a horrible new weekly low. We closed above the prior week's low. Check out the FXY, which is the Japanese yen. Japanese yen bouncing. This is the second largest component of the Dixie basket. The euro being the largest component. So if you get the euro and the yen rallying together, the dollar goes like this. Let's go back to futures. Let's put in a alert here. We would just want to know if gold makes a new weekly low, because it will influence what we do with our gold mining trade. Okay, we're good. We have 44 people on. If I can get 44 thumbs up and likes, I'd appreciate it. Thank you very much. I appreciate it very much in advance. Copper. We are really approaching a point at which we're going to need to resolve this triangle formation. We're entering the apex, and I think it gets resolved to the upside. Why do I believe that, despite the fact that we're seeing a lot of red bars here? Well, we're seeing a lot of red bars, right? Sequentially, the probability of this continuing without a rally is improbable, and that rally should send us outside this upper band of resistance in green. Add to that fact, when you take a look at the weekly chart, the uptrend is clear and defined. Yes, we corrected, but we're bouncing back. So copper, I think, gets resolved to the upside probably as soon as this week. Let's talk about, and for those folks just joining in, we're going to be talking about our trades for the new trading week: Chipotle Mexican Grill and Netflix in a moment. We're going to leave that to the end because it is an options trade. I know some people aren't into options, but we're doing more and more of it. I like it. It's been a staple of mine for a while. I really wanted to build out our offerings at the Contrarian Trader, not just simply swing trading stocks. There's so many people out there doing it, and I wanted to broaden our offering to include option strategies, which primarily means selling options to generate cash flow, not buying them. So stick around to the end if you're curious, and I have the trades up here if you want to take a look at what we're looking at. Case in point, the probability analysis that we'll be doing of Netflix is here. The probability analysis of Chipotle Mexican Grill is here. And we're going to talk about the implied volatility of both. But again, we'll save them for the end for those people interested in options trading, so stick around. Before we move into the inflation discussion, let's talk about economic data that was released last week. CPI data in fuego, hot. This is highly manipulated. If you went back to the 1970s style of how they calculated the CPI, we would be double digits right now. This is a manipulated number. So this is what they're admitting. It came out almost twice as hot as what was expected. The PPI, same deal here, a very hot number. And frankly, the Fed chair said that, yeah, we have inflation. Yeah, by the way, Mr. Senator, Congressman, it's not transitory anymore. It's probably going to stick with us for a while. What do we plan on doing about it? Oh, nothing. It's a dynamically booming economy. Yeah, we're going to continue quantitative easing. And sure, yeah, we're going to continue to finance you sending out stimulus checks to people that they're going to get a child tax credit, but they're on welfare. They haven't paid taxes probably in 10 years. But we're going to send those checks out because we're going to keep financing your irresponsible behavior. Oh, yeah, by the way, that $3 trillion stimulus deal, the human infrastructure deal, you got it. We're going to finance that. So don't worry about it, because I know what will happen if I say that we need to raise rates. You're going to come at me at like a bunch of banshees. So I don't want that. So I will finance whatever you want me to. So yes, there's inflation and my job is price stability, and I should be raising rates, but no, don't worry about that. I'm just going to take gasoline and I'm going to pour it on the fire. So let's begin with that, with our conversation with regard to, is there going to be deflation or inflation? You need just start with this economic data that came out Tuesday and Wednesday, and you can decide for yourself. It doesn't take an economic genius. The only reason why they created economists or weathermen was to make economists look good, right? So it's just common sense. If you have a Fed chair saying we're not going to fight inflation, in fact, we're going to make it worse, then what's going to prevent CPI from moving up higher? So when you take a look at the import data, which was released on Thursday, it came in a lot hotter than the year-over-year price comparison. Here, import prices climbed 1% in June as America paid more for foreign goods. But what they want to tell you on CNBC and Bloomberg is that, no, it's transitory because it's used car prices that are propping up the inflation. And once those used car prices come down again, well, inflation will go away. We don't import used cars here, we export them. So what's going to prevent, what's going to bring import prices down when our used cars here in the United States diminish in value? I don't think that they're going to diminish in value. I think new car prices are going to go higher, and they're going to make current used car prices look cheap. So if you take a look at the real economic data, the real inflation, this is from, I didn't make this up, this is from the U.S. Bureau of Labor and Statistics. This is what they freely admit. All imports, this is imports, June 20 versus 2021, all imports, price inflation, a rise of 11.2%, folks. It gets better. Exports, a rise of 16.8% year over year. Think about that. Now, this is not massage data. This is not like what they do with the CPI and the PCE indicator, the PCE report. That's another Fed favorite inflation report where they use hedonics, where they massage the numbers saying, okay, beef prices go up, people switch to pork, which is cheaper, and they manipulate and massage the numbers lower. These are real numbers. And you may be saying, well, if our exports are going up in price, well, that's kind of a good thing. Well, there's only one problem with that. We export a lot less than what we import. And you got to ask yourself the question, why are export prices going up so high? It's because it costs so much to produce them here in the United States. Why? You can't get parts. Why? You can't get labor. You have to compete with the U.S. government to get employees to come back to work. You're paying people to stay at home, produce nothing, and yet they're getting stimulus checks in the mail. And what does that do? It creates more demand. There's only one problem. There's not enough supply. So if you're not going to produce more when you're sending out stimmy checks, what's going to happen to prices? They're going up like a rocket ship. So this conversation with regard to, are we going to see deflation or inflation? I think that the data speaks for itself. And the conversation, the next time somebody says to you, the rise in inflation is due to used car price increases, give me a break. Here, all you need to do is take them over here and say, okay, good stuff. Then why are our import prices rising as well? What's going to bring that down? I just dropped the link in the box. Xlk. As a matter of fact, before we go to the Xlk, let's talk about, as we do, and I spent a lot of time with this with members on Market Wrap on Saturday, not Market Wrap, the week ahead commentary on Saturday. And, the question was asked about, for the next 12 months, do I feel comfortable with owning stocks, accumulating stocks? No, I don't. That's one of the reasons why we changed our strategy going back to April from staying long of equities and using more options trades, selling options, generating cash flow, and reducing our risk, our exposure to this market. And while sure, it's prevented us from making money staying net long the market, but our job is not primarily to make money. That sounds crazy, right? It's the last thing you want to hear a guy that's supposedly a guru on YouTube say. But it's true. Our primary goal is to manage our risk so we can live to play another day. Because this is not going to end well. This is the Buffett indicator. We enter another week strongly overvalued. We are at highs never ever seen before in recorded history, including the dot-com bubble. We are at current We are, yeah, we were above. I should 2 weeks ago we were higher. So we were above a 3 standard deviation Bollinger Band. Right now, well, not a Bollinger Band, we were above a 3 standard deviation move beyond the historical norm down here in black. Right now, we're at 2.9 standard deviation above. Enough for government work, right? So we're beginning to roll over here. That is not bullish for stocks. Can we pop up higher? Sure, I guess. But do I want to be buying equities? No, definitely not. That's why we carry a short position in the small caps and in a growing fashion, the Qs. We're going to be looking to add more to the Qs in the coming weeks. I'm going to talk about seasonality in a moment. So, Buffett indicator, 2.9 standard deviation beyond the historical norm. This is going to end horribly. The Shiller PE ratio, the second highest of all time, we enter the new trading week. Only trumped by the March 2000 highs of the dot-com bubble. Now, taking a look at the XLK. XLK, we are here at current. Seasonality still favors for the next couple of weeks XLK moving up higher. Now, we will then enter a period of where you go into a downtrend. And I validated this. I didn't want to just bring this up and take it as gospel. What I did was I went into TrendSpider. And again, you get this with, I think this is all membership levels, 35% discount code below. And I brought up the Xlk monthly chart. And you could see that the month of July over the past 12 years has been up 100% of the time. So the probability of this continuing is highly improbable. Now, August, we are up only 55% of the time. Same deal in September. So we should expect some of the froth to come off the XLK. And the correlation between the XLK and the triple Qs of late has been very, very tightly correlated. I don't know what it's been over the past 12 years. We're about to find that out. Very tightly correlated. Qs seasonally up 100% of the time over the past 12 years. The probability of this continuing is highly improbable. August, usually up 55% of the time. By far, September is the weakest month seasonally for the trip Qs. So we will take advantage of this data. We can also break this down to a weekly view. We are here. And beginning this next trading week, things tend to get a little spicy for the trip Qs. And again, this goes back 12 years worth of data, not insignificant. Somebody asked me about the IWM earlier. Let's bring that up because we are short of it. I'm curious. I think it was a good question. Seasonality. Let's begin with the monthly view. July is a meh month. August, a horrible month, by far the worst month of the year. Only up 45% of the times. September, not much better. Then things improve in September, November. Taking a look at the weekly view, we are here. The next couple of weeks are men's and men's up 50% of the time, 55% of the times. So interesting statistics here. Again, brought to you by our friends over at TrendSpider. All right, let's take a look at what else do we have up here. Oh, let's do some. Do we have any chart requests? I think somebody did. Abel did. Let's take on Abel's request. Thank you for the super chat again, Abel. Appreciate that. All right, so I was thinking about you on Friday because when I looked, I was bearish on it when we spoke about it on Thursday, and I took a look at it on Friday, And when I looked at it, it was up. I just want to see how it closed out. All right, so it didn't do what was necessary. We had broken down on Friday. We bounced back in an effort to recapture support. That effort was rejected. We did not do so. It may happen on Monday for all I know. I'm not saying it can't. But at current, using our discipline, we cannot buy Fastly stock until we recapture and close above this resistance level here. What was the high of Friday? High of, let's use $50.50. That's a safe number. The high of Friday was $50.47. We need to see it close above resistance. And ideally, we want to impose the 3-day rule. We want to see 3 trading days above that support level. Day 1's the breakout. Day 2 and 3 are the consolidation days. Those are the validations that we are going to hold that support level. Then after nibbling, you could add more in a continuation breakout. Let's see how we closed out the week. Yeah, we closed down below support, right? We were looking for a higher low here. And now that we have a new data point to deal with, what I want to do is take our crayon out. Oh, what did I do? I screwed this up. Let's take this out. And create a new alert. So what we're looking for here is rule number 1. What's rule number 1 when you're looking to buy a stock that's in a downtrend? It's got to stop going down. It's got to stop putting in new weekly lows. We just went over the futures. What's the first thing I did when I looked at S&P 500, mid caps and small caps? I put a line right underneath the candlestick to show me if we had a new weekly low. That's rule number 1. We got to make sure that we stop putting in new weekly lows. So we'll keep this active for a couple of weeks. This will tell us whether or not we are probing new weekly lows. And if we hold this lower band of support, well, maybe then we stop putting in new weekly lows. Maybe we are now beginning to put in a higher low from this prior low here. That's the ideal situation that you want to see. But right now, I couldn't condone a buy of the shares because I had to take you back to the daily chart and just fall back on our very, very simple game plan. If we manage to recapture the support level, great. Game on, 3-day rule. If we break down to new weekly lows, we avoid. We watch. That's the discipline. Let me share this weekly chart with you. And again, thank you for the super chat. Copy. For those folks just joining, if I could ask you to smash that like button, I'd really appreciate it. What else do we have here? How much time do we have? 6:39. We got plenty of time. M. McNeil and Jody T. All right. AT&T, it's a yielder. All right, so I just took all my trend lines off. Now, there is a bit of a divergence going on here on RSI. I'm going to talk about that in a moment. But first, I want to bring up the automated trend lines. This is the algorithm, and we'll see where we're at with the automated trend lines. I did not draw these. This is TrendSpider. And what I want to do here is create an alert down here. So our alert is set right down at, let's call it, it's declining. Let's call it $27.50 to $27 per share, thereabouts. I mentioned earlier that I saw a bit of a divergence going on. Let's memorialize it. Ooh. Maybe not so much. Technically, we are currently breaking down on RSI. I thought we were going to put it in a new higher low. Maybe we still will. We still have several trading days left to go in the month. But RSI, which I thought was beginning to hook up, and it does appear to be flattening out, doesn't look that good. Should we close down the month below this lower band in red? That would be a breakdown. You don't want to see that. So watch for your alert to get set off around that $57 per share mark, $57.50, give or take. Let's extrapolate this onto all time frames. All right, so now it'll appear in our weekly chart as well. Last week was a doji star formation and no new weekly low. And we are at a support level. As noted by this volume shelf and all of these candlesticks back here bouncing off of, what is it, 58.25? 28.25, right? It's hard for me to see these numbers sometimes. In green, it's terrible. Green over green, it's terrible. From my eyes, anyway. So 28.25 appears to be pretty good support. We closed at 29 bucks a share. This looks kind of interesting, to be honest with you. But take note of the RSI, lower lows. I would do this. I would want to know, we're going to bring this down further. I want to know if we break through this or retest it. So if this fails, 28.25, we're coming down here to around, again, 27.50 per share. Daily chart. Daily chart's not looking good. You had a bearish key reversal bar on Friday. RSI is very weak. I would not buy this stock at current. I'm not saying it's not going to hold last week's lows, but 28.63 is resistance. How is that possible? We closed at 29.06. Hold on. Oh, my mouse is over here. That's why. We closed at 28.34. Okay, that makes sense now. So Watch. Bearish key reversal bar. We closed just off the lows of the week. Be careful. AT&T. Probably going to retest last week's lows at a bare minimum. CLX. Bacardi, sure. Weekly chart. CLX looking good. This is a COVID play. Where are we at on the month? Clorox looking really good. Again, these are automated trend lines in blue here, folks. If you're not good at drawing your support and resistance levels, TrendSpider does it for you. Click of a button. Bam. This is a buy. It looks like a buy to me. Nice reversal bar in the month, but the month isn't over yet. A lot can happen. Weekly chart. The weekly chart is in the books. I would watch for a breakout here. A continuation breakout above 187.50. You have RSI, which is strong. Nice breakout here. Now, when I really get bullish on Clorox is if we break out and above 196.65. So we had an undercut double bottom. Not my ideal bottom here, not my ideal base. Normally I like to see a higher low, but it's looking strong on a monthly time frame, weekly time frame, daily chart. Right near that resistance level. I couldn't condone a buy right now. An aggressive buy. You want to nibble on it, fine. Scratch the itch, get it out of the way. I'm fine with it. But I would not be an aggressive buyer until we broke out above resistance here. Very nice. Good looking chart. A defensive play, no doubt. The Delta variant probably going to influence this stock. You're welcome, Tommy. TLT, strong week last week. Very strong week. Let's look at the monthly chart first. We have a continuation move up higher. We have resistance immediately above at or around, let's call it 150.38. Where do we close? 148.21. This is just going to act as a rising upper band of resistance. That doesn't mean it can't head up higher over the course of time. Weekly chart. The weekly chart, very strong. We had a bullish key reversal bar last week on volume. RSI validating the move up higher. We have resistance at around 155 per share. Let's overlay on top of the weekly chart monthly resistance as noted by the algorithms. Those resistance levels are in dashed line, and that's at around 155. So a lot of room to the upside here for TLT. It looks like it's going up higher. That does not bode well for yields. If yields press lower, that does not bode well for the small caps. Daily chart. Good reversal bar on Friday. We're inside of a triangle formation. What do I mean? Let's take the automated trend lines off. Throw them back on. Here you have your lower band. Here you have your upper band in green. Looks as though we're going up higher. We have a lot of room to go before we hit resistance. TLT, bullish. Now, before I leave the TLT, I don't think that this should be going up. Why? Inflation. Why would you want to own our debt? If you have You just had CPI report come out, PPI report come out, both hot. These are the government massage numbers. Then you have import-export prices come out, hot, double-digit inflation growth. Yet the dollar's going up and bonds are going up. The only party out there that's buying our bonds right now is the Federal Reserve. Did you see the Federal Reserve expansion of their balance sheet last week? They spent 1 week over $100 billion. You want to know why bonds are going up? Crazy. Absolutely crazy. NLST, net list. I don't know this company. This is not going to end well. We are trading nosebleed levels above the third standard deviation Bollinger Band. We have RSI monthly time frame at 94. If anything, I'd be looking to short it. Weekly chart trading above its third standard deviation Bollinger Band. And I think it was McCarter. It said sentiment is best reflected by RSI, which I agree with. And forgive me for not crediting whoever brought that up, because I have so many comments in here, which is great. Oh, here we go. Westerlaw. Sorry, Westerlaw. TA doesn't show investor sentiment. That's, well, no, technical analysis does include RSI. So it does show investor sentiment. This is extreme delusional. This is extreme confidence as measured by the RSI. We have a weekly RSI at 93.14. So it is captured in the RSI. It's also captured in price when it's relative to its prior moving averages. So when you look at the price action relative to a third standard deviation Bollinger Band, it's ridiculously overvalued. Two standard deviation, enormously overvalued. So this is going to be, in a few weeks, this is going to be a disaster area. So I would not buy this stock. If anything, I'd be looking to short it. I don't know if it's optionable, but I would look to sell deep out of the money, call options if it is. Naked options, not covered calls. We had an up day on Friday, fairly good volume. Volume is rising on average. But I can't buy the stock. It's way too overvalued. I'm not going to be the least bit surprised to see it go higher tomorrow for whatever reason. I don't know what they do. But this is not going to end well. It never does. It never does. I've been doing this for a long time now. I've been coming on live. When the SPAC craze was around, people were giving me SPACs. I was like, oh my God, this is not going to end well. And sure enough, you take a look at those SPACs now, devastation. So I would avoid this unless you're going to short it. Okay. Let's take a look at no options. Okay, thank you for that. Yeah, we'll go over the tips. Tips looked really, really great last week. New all-time highs. And again, why do you want to buy bonds? I know tips are a bond, okay? Why do you want to buy long-dated treasuries, get paid nothing? In real terms, they're yielding a goose egg, negative goose egg. So why anybody would want to buy, this is inaccurate, this chart. Oh, because I put the wrong symbol in, idiot. Sorry about that, folks. I would want to buy tips, yeah, but not long-dated treasuries. You're losing money. You have double-digit inflation. Why do you want to get paid nothing? You're paying the government to take your money. I don't understand it. Anyway, tips, weekly chart. Big breakout last week as measured by the automated trend lines. Again, TrendSpider, 35% discount code below, free to silver and gold level members. Weekly chart, breakout, above resistance. Watch for a retest of this breakout point. Little bit of sensitivity, little bit. Not too much, little bit. There we go. There we go. That's good. I love the chart. Keep it active for a couple of weeks, and we're good to go. I think we're going up higher. Daily chart. A bit extended relative to the 2 standard deviation Bollinger Band. Maybe this is going to be the opportunity to get a pullback, retest, and entry point. You could slide right in, like slide into a DM, slide into the tips. Because longer term, monthly chart, this is going up higher, folks. Look at this monthly time frame. For those not familiar with what a tip is, Treasury inflation protected security. Monthly breakout, new all-time highs, bullish. Okay, let's talk about our trades that we're going to be looking to put on for the new trading week. If you're not familiar with options, give it a chance, okay? This is where I'm taking my business in the future. Is not just swing trading equities long short. It's trading options, but not just buying options, selling options. Yes, it requires an account balance of $25,000 or higher. Maybe you have a brokerage firm out there that allows you to do options trading, maybe offshore, I don't know. But I'm pretty sure the FINRA rule is you need $25,000 in free cash to trade naked options. So NFLX, this is the implied volatility. Now, you can see that we're heading into earnings. We're going to be looking to trade an option expiring on the 23rd. So the 7-day contracts. A month ago, the calls and the puts were they're about a 22, 23 handle. Right now, those calls and puts have a 60 handle. So what does this mean? It means that the options are overvalued. Why? It's because you have so many people going in there and they're buying options. That's what drives the price of an option, or implies volatility, is demand for the option, supply and demand. No different than buying a widget, right? The thing is that after earnings are announced, there's what you call IV crush, meaning implied volatility crush. You get a reversion to the mean, meaning that this is going to go from 60 back down into the 20s in a very, very brief period of time. It's just going to collapse. That's how you make money selling the options, deep out of the money. And we're talking about, our goal here, as I mentioned earlier, is not making money. It's about not losing money. So what we want to do is set up a trade that gives us a 90% probability of profit or better. So we're probing right now. This is subject to change, but we're modeling, assuming that we close out the day on Monday at $530.31. Obviously, it's not going to happen. This is the closing price of Friday. At current, we are targeting a call option to sell the 555 call option. At the same time, we're going to sell a 505 put option. That will generate us a $12.75 credit. So one contract means $1,275. As soon as I get a 50% profit, which will probably come the next morning, usually does. Like last week, we traded Goldman Sachs. We made a 50% profit within 12 hours. So I would expect to close out that trade next day. So our risk is very, very low. Our reward, a 50% profit, not bad. The other trade we're looking to put on is Chipotle Mexican Grill. Now, if you like that, by the way, folks, if you get any value out of that, even if you're not familiar with options, you learned a little bit, you like the style, if you want to leave a comment Let me know if I'm doing the right thing here. I'm interested, not interested. Give me a like, give an approval that we should continue talking about this. Then it gives me the courage to continue moving forward. Because believe me, some of my members didn't like that I started trading the options and they quit. I have to say it. Even though we made a lot of money. So leave a comment, leave a like if you approve of it. The next trade we're looking to put on, we're probably going to do both of these trades. The only two trades I really like for the new trading week, Chipotle Mexican Grill. Again, we're going to look to sell options expiring on the 23rd. A month ago, the implied volatility of the calls and puts were at around, let's say, just shy of 25. At current, they're at about just over 40. So again, we're going into earnings. You have speculators out there bidding up those options, and we want to take advantage of the implied volatility crush. So what's the trade? Well, again, subject to change, but we're modeling a trade to have a probability of profit of 88.5%. So we're going to look to sell to open the $1,625 call contracts, sell to open the $1,500 put contract, again, expiring on the 23rd. That would generate us $23.70 per contract. That's per contract, $2,370. Let me read the comments here. All right, Marcard, I didn't go over WoW. I'm going to go over WoW for you. Don't give up, okay? I forgot. Cena, I'm just seeing you. Boeing, you got it. Cena's one of our members. And I want to read the comments with regard to, well, Chin or no, well, if you're going to buy leaps, you got, like, if I were to buy a leap, I would do it on, like, natural gas. Or I would do it on coffee right now because they're coming out of long-term bear markets. They're entering new bull markets. So I don't want to buy the options. I want to be in, out. So that's why we're going to trade the 7-day options because they're so expensive. If you sell a leap, the implied volatility on those leaps aren't being bought up by speculators right now. Only the short-term options, right? So don't buy a leap. A leap, for those not familiar, those are long-dated options going out, I don't know, a year, 2 years, 3 years. So this type of trade is not suited for leaps. All right, so let's read the comments. And Crank's awesome show again. Good. McCarter, so true. Needed to hear this tonight. Clark, very interesting. Good. McCarter, Bob the Assassin. Jody, definitely interested. Good. McCarter, definitely interested. Good. I'm going to say Spiro. I can't say the first name. Great stuff. Want to learn more? Good. Okay, cool. Randy, like the options. Good. Don't think my personal account is big enough, to be honest. I'll email you. Okay, that's fine. Chinner, I was kidding. Oh, all right. Thanks, Chinner. I got it. Thank you very much. Appreciate that compliment. Langley, love the option strategy. I join. If you did this regularly, we do it regularly. Last quarter, we killed it. Normally, I don't trade earnings by buying stock or even shorting. We do trade options, though, because it's quick hits. Good. Yeah, the zone, I think, helps out a lot. A lot of traders use they use different graphs to show you. I find this to be really fascinating, very simple to explain to people. So I'm going to stick with this format. Chris, hey, Bob, if you have time, can you check out BIGC and OPTT? If we have the time, I could do both. I'll definitely do OPTT, though. John, fair enough. If you don't know enough, you paper trade. If you have Thinkorswim, you trade with a paper account. Langley, explain worst case scenario. Well, the worst case scenario is that the price either shoots up above resistance or shoots down below support. Now, what's your strategy there? Well, remember that what we're doing here is we're trading about a 1.5 standard deviation move. So while, yes, it can certainly drive through that upper band of resistance or drop down below that lower band of support, remember that stocks are cyclical in nature, right? So they're going to rally, but they're also going to roll over and retest, put in higher lows or break down to new lower lows. So what you do is we have the 23rd option. Let's say that in the case of CMG, it trades above 16.25. We're getting paid $12.75. So what's our true basis cost here? Let's say it shoots up. So we have 16.25 point plus $12.75 plus. That's our break even, $1,637.75. If we close out the week above that mark, then we'd be in a loss zone. What do? We roll out the trade. We roll out probably not just a week. I'm going to go out, same strike, go out 45 days. Then I generate an even larger premium, bring up my break-even point, and if by chance we trade down below that the new break-even point the following month after 45 days, then I close out the trade, I book my profits, and I live to play another day. So that's normally what we do. But honestly, it's rare that we have to do it because we use such tight probabilities because we don't want to be in that position if we don't have to be. So I hope that answers your questions. Correct, Randy. Randy's point is absolutely correct. Okay, let's go back. We'll do a couple of more chart requests. Wow, before I forget it, for McCarter. Wild Open West. This is pretty extended. It can go higher. I've seen a lot worse. The month is good so far. New monthly highs. Weekly chart. We didn't hold the breakout last week. So I'm going to take off the automated trend lines. I'm going to bring them back up. I wouldn't have thought to do this, but I'm going to do it anyway. You're in a rising uptrend channel. The upper band this is the algorithm doing the work for you. TrendSpider, 35% discount code below. If I'm long and we break out above 2182, let's create an alert here. Because right now you're at resistance. I'm going to assume you're going to want to get long. And if you're long, I'm going to show you how I would close out the trade. Assuming that this is a swing trade. Okay, we're going to keep this active for, I don't know how long we would be long of it. 48 days. Actually, no. Shorter. I'll show you why in a moment. This is a buy alert. This is going to be your sell alert up here. Give a little bit of sensitivity. This is if it's a swing trade for you. Now we want to keep this active for, 50 days, assuming that we get long. That's the trade. Daily chart. A reversal at that resistance level. If you want to buy the pullback. A little bit of sensitivity. Now, this is a highly speculative trade. I would only do this if the market finds its footing. Speaking of the market. All right, so our alerts are set here. We're good to go. I just want to see what the S&Ps are doing right now. VIX still strong. Dollar rolling over. Aces. What's gold doing? Gold is now rallied off the lows, still down, no new weekly low. Good to see. Equities. Sheena, I didn't forget about your Boeing. We're going to go over that in a moment. How much time do we? Oh, 7:12. We got to get moving here. S&P 500. Still pretty weak. The NASDAQ. I don't think I went over the NASDAQ before. Where the hell is it? Here we go. New weekly low on the NASDAQ. Consolidating. I think they're going to rally here. I think they're setting up for a rally. Dollar continues to weaken here. Good stuff. We want the crash. Good for our gold trade. All right. Let's leave it off with Boeing. I'm out of time here. If you're a member, I'll stay on all night long. Or if you do a super chat all night long, but I'm way over. Boeing is becoming very interesting. It's getting clubbed over the head. Wow. Where did we close last week? 217.74. We broke support. On the month, but we may rebound here. Weekly chart. Horrible week last week. Wow. If they don't gap it up tomorrow morning above 218.61, we're heading lower here. And if we do move lower, I'd be eyeballing that 203.83 mark. If that fails, we're going down to 190, which has been my long-term support level for a while. I would love to get it there. And we're good to go. Folks, I wish I could stay on and do a lot more, but I got to run. I want to thank you for being here. Smash that like button if you haven't already done so. I'd appreciate that. Leave a comment. Subscribe to the channel. TrendSpider, 35% discount code. Join the gang. Learn how to trade options. And everybody have a profitable trading week and enjoy the rest of your Sunday. Be well.